2022. Can you see they start again with a little bit of a theory here. They say, choose the appropriate item from the list. And can you see what they do is they actually give you words already. Okay? So now you just need to fit it. So 3.1, so what do they give me? They give me an income statement, a balance sheet, a cash flow, and a director's report. To affect the effects of operating, investing, and financing. What's my three activities? Can you see?
Yes.
That's cash flow, ne? To provide a written explanation of the financial performance, that's the director's report. To reflect the performance of a company in terms of its gross operating and net profit. Where do I calculate that? Income statement. Okay, there's 3 marks in the back. The information relates to Jesse. Mike Stuurman was appointed as the CFO as a result of his successful track record of improved performances at other companies. That's why he was poached to come to us. Ne? He is not a shareholder. Okay, now you can't just say, oh, that's good or that's bad, because it could be something of both. Because if he's not a shareholder, it means he's totally objective. But if you are a shareholder, yeah, so it's actually better, because now he can't act on inside information, so this guy is totally above board. Okay, unless he talks to his friends who's shareholders. So let's go on. Now they say, provide, and can you see every time they actually tell you what you're supposed to do? Provide figures, trends, and indicators. Ne? You name trend figure. Or calculations in each case to support your comments. So now they talk profitability. If they talk profitability, they talk the something on something, ne? Something on. Okay, so that's the ones I'm looking at. So if I look at my information, the first thing I always do is I want to make sure, how do they give it? Can you see? They give me one company. Okay, so let's quickly look. Can you see we are working with one company and they're giving me 2 years, and then you say, thank goodness, because this is the least complicated way of asking it. Okay, so now I see profitability, and if I look here, quickly mark which one says profitability, and I see, okay, there's markup, operating expense, net profit on sales. So they give me 3 that I can use. Okay. Now, let's just go on. Here we say, Mike has informed the board of directors that he has identified and rectified meaning fixing, a number of incidents of fruitless and wasteful expenditure in the company's records. So in other words, his operating expenses is now more effective. He's not just having a lot of expenses, but it doesn't make the profit grow. Okay? Provide 2 financial indicators that justify the success of Mike's strategies. So now, out of the 3, you want to go choose the 2 that shows an improvement. And can you see, it only counts 4 marks. So they don't want you to say, oh, it's because he paid less electric, nothing. They literally want you to name, trend, quote. That's what they want you to do. So now let's go do that. So if I look at the markup achieved, can you see the markup increased? He actually made the goods more expensive. Okay. No. Let's go back. Let me reverse what I'm saying. The markup achieved is not necessarily your markup. So, in other words, if they would say to you, they use a markup of 80%. Ne? Then if you go calculate the markup, you go calculate the markup achieved. This is actually how much they did get, right? So in other words, if they say at the top, the company uses a markup of 80%, and then they give you a markup achieved, like here, it's how much that you really get. So yes, we have a markup of 80%, but here we only got 60%. Why? Well, because maybe we gave a lot of discounts to clients. Maybe we had a lot of sales, like end of range sales or end of season sales. Because what happens in a sale? They bring the markup down. So this is actually your average markup that you got. You see? And can you see now there's an improvement? Because this average is lower than that, meaning we gave less discounts to people. We had less sales. We didn't need to have that. Why would we have a lot of sales? It's when our stock don't sell. You don't have an end of season sale if all your stock is sold out. You will have an end of season sale if you had a lot of stock left over and you know you can't sell it because now it's winter and it's a lot of bikinis. Then you have a sale. Okay, so a sale is not a given in a shop. Most of the times, you will see, for instance, Clicks and Dis-Chem does the 2 for 3 thing, yeah? A 3 for 2 thing. But you will see, for instance, that especially if it's food, that the expiry date is very close. So now they see the expiry date comes close, so now they sell it out 3 for the price of 2. Ne? You will see especially things like magnesium, those fizzies, because those fizzies also got an expiry date or a sell-by date. So the expiry date is always after the sell-by date. Ne? So that's what they do. It's when their stock isn't moving fast enough, then that stock they put on specials. Okay, so now let's go look. Next one. Operating expenses on sales. Can you see it decreased, which is good. This is the only, and can you see exception sounds like expense. So expenses is the only exception. Everything else in those ratios, we wanted to go up. But expenses, we want to go down, which it did. And if I look at the next one, the net profit on sales also increased. So can you see, you can literally quote any one of the three. Okay, so let's see. They did not quote the markup achieved. Okay, because the markup achieved is not necessarily the CFO's workings. Okay? It could be the sales marketing people that did that. Okay, so it's safer to quote the two that he had an influence on. Okay, that's got to do. Oh, and can I quickly also say, what is the question? The question here is, it's about the expenses going on. So now where do you get the markup? Sales, less cost of sales, gives me gross profit, plus income, less expenses. Can you see this markup is here, it's before the expenses. So it's not a proof that the expenses is better controlled. What is so can you see that's where the insight is. So I was wrong saying all three, it's just those two. Because this one is before the expenses already. Can you see you have to know your formats. And now look how they gave marks. Can you see the financial indicator, 1 tick. So there's already 2, just naming it. Please don't just say it increased or it decreased. You name the whole thing. Because this is a gold mark for you. Okay? And you're not going to abbreviate weirdly. You can abbreviate saying percentage operating expense on sales. Okay? Don't just say OEOS, Because some people do that. You will not understand it. But this isn't chemistry. Okay? So, has decreased. Ne? Now can you see this gets 1 tick. And the trend and the figures gets 1 tick. Okay. So let's say you did the markup. Then it means you can get at least 2 out of 4 because they're not going to mark the markup. Yes.
Let's say they put the figures from in brackets.
It means that when we are marking, we actually don't even look at that. If you just said it has decreased to 14.8, they also mark it. I just feel safer if you write from this to this because you do not know if they might change their mind again by the end of the year. So I would say rather say from this to this because that's how it used to be and now suddenly it's no longer. So yeah, you take the chance. Okay. I think we'll get a good indication of how they will mark it with the prelim. Okay. So, let's go on. Next one. If I can find my stuff. There we go. So, no. Next one. Dividends. Now, dividends, I know if I see dividends, I want to quickly ask myself, is this DPS? Or are they talking about the dividends itself, the dividends that's declared and paid? Or are they talking DPS over EPS? You have to make the difference. So they say, explain whether the change in the dividend payout rate. So they're talking about this one. Okay. Will benefit the company or not. So now, can you see? You think immediately you have to say all these wonderful things. But it's not true. What are you going to do? You're going to name, you're going to trend, you're going to quote. Now with the DPS, EPS, the name, trend and quote is going to be last year, this was the dividends, this was the retained income. This year, this is the dividends, this is the retained income. And then you're going to say, whatever. Now remember, if the dividends increase, it's to keep the shareholders happy. Okay? If the retained income increase, it's to expand. It's for future expansion. And this is how you study this. So now let's go look at what they give me. So I'm going to look for the dividend payout policy, or they will say dividend payout rate. Now, how will I quote it? Can you see? This one, 97 is dividends, meaning 2.4 is retained. Does that make sense to you? Okay. This one, 46 is dividends, meaning retained is going to be 53.4. Can you see how their policy changed? And it's not necessarily that people get less dividends. Ne? This is because it depends now how much the net profit was. Remember now the net profit increased. So it means even if I give a smaller percentage of the net profit, it might be exactly the same amount that goes to the shareholders. Does that make sense to you? Because if I say to you, let's say I had my profit is 100 Rand. And I give 90%, ne? Then it's 90 Rand dividends, okay? But let's say my profit goes up to 200. Can you see if I give 45%, they still get 90 Rand. So the amount of the net profit, the percentage net profit goes down, but the amount of dividends I pay out is still the same. Yes. Okay, so let me show you. If I say to you, my net profit after tax is 100 Rand, and I say to you, my dividend payout is 90%, Can you see 100 rand times 90% is going to give me 90 rand dividends. But now let's say this year my net profit doubled. Now it's 200 rand. Can you see if my dividend payout is 45%? Ne? 200 times 45%, it's also going to give me 90. So in other words, my dividend payout policy, which you are not allowed to write like that, my dividend payout policy, ne? The dividends percentage of the profit decreased and my retained increased. But the physical rand value that goes to the shareholders is still the same.
So the 8 is, they say the 8 here was at 90 rand.
Yeah.
So we just
So because my profit is more, we decided, okay, because the profit is low, let's give the same amount to our shareholders. Ne? So they will be happy still because they didn't get less than last year. But let's then push up the amount that we keep as retained income, because maybe next year it won't be as well. You see? So you guys have to see that. The percentage can go down, but it doesn't mean the shareholders gets less cash. Okay. Now let's look at this. So now how are we going to word this? We're going to say, in 2021, the dividend payout was 97.6 and the retained income 2.4. In 2022, the dividend payout was 46.6 and the retained was 53.4. Or you can say they increased the retained income from this to this. Ne? Let's see how they answered it. They say here, the dividend payout rate decreased from this to this. The retained income, ne, is this year 53, last year 2.4. Can you see if you answered it the way I told you now? Because I want you to get a pattern that you feel, because I think the biggest problem with ratios is that feeling of uncertainty, right? So if you can get over that feeling of uncertainty and you have a model answer, if you had said, ne, last year they paid out 97.6 and retained 2.4. This year they paid out 52.3%, but retained what, 53.4%. Then you'll still get your tick. Can you see it's only one tick? So it's a lot to write for one tick, but at least you know you've covered all your bases. So now for the two ticks, what are you going to say? What did I say? If the retained income increases, it's for future expansions. So you say there, they retained funds for future expansion. 2 marks. Can everybody do that? So just learn this. Dividend payout policy. If the dividend percentage ups, it's for the shareholders. It's to make them happy. If the retained income ups, it's for future expansion. And that's a model answer you need to keep. Okay. Next question. Risk and gearing. Now I know. Risk and gearing. What's the two ratios for risk and gearing? That's a debt equity and ROTCE, ne? So I go, look, here's debt equity and where's ROTCE? Which one of the two is ROTCE? It's the capital employed one, ne? The one that's working. Because the one that's working is she and loan. Okay, now I see those two. Before I even read the question, I go right down debt equity and ROTCE. And can you see? Oh, we haven't finished the previous question. Okay, but let's finish this one and then go back. So can you see immediately debt equity a mark, Ne? Rotki a mark. Just writing those two down. Sure. Now if you quote them, can you see I'm not even reading further? If I quote them, my figures, it increased from this to this. Don't do the by. Okay? Can you see it increased from 0.221 to 0.321? It's moving up, ne? But it is still low geared. So I will say low geared. Ne? Can you see? Explanation. Low geared, low financial risk. How easy is this, marks? So you got 1 for that, 1 for that, 1 for that. So you already got 4 marks. Now we just need to quote Rotki. And Rotki, they say, it increased from this to this. And what do we compare it with? Interest on loan. And the interest on loan is only 7.2. So now what are you going to say? You can say it increased from this to this, or you can say it's more, I think, which is a better one. You say that 69 is bigger than the interest on loan of 7.2, which means we are positively geared. And with this, you only do this for 1 mark, but you can actually get 3 marks for all of that. Okay, so they say they have positive, just by saying positive gearing, you already got it there. You see? And the trend, it improved from this to this. Okay. Can you see? 6 out of 6. When you guys did this, I want you to mark it now, what you did, and see how good you're going to do in this question. Ne? This is going to be in the end your favorite question. And then 2, and then 1, and then 4. 4 is theory, and there's always something you don't know. Oh, before I forget, Mondays, let me just pause. And I did tell this to you before also. No, it's not new. Here we go. It's just this thing that I didn't tell you. Okay, so this is on the video. So if people do look at the video, they will know. Okay, so it's not that I'm ugly. I'm saying, please go research that. Okay, so let's go on. I forgot to do the dividend second one. Ne? So the dividend second one, they say, Sue Lee, a shareholder who owns 5,000 shares, is satisfied with the dividends she has received, despite the change in dividend policy. What did I just explain to you? Ne? That which she receives can stay the same, even though, or it can increase or decrease. It's the percentage, the dividend payout policy is about the percentage of the earnings that goes to dividends. So let's see why she should be happy. Now your head should already think, now we are talking this one. We are talking DPS. Okay? So now let's go look. What is the DPS? So if I look at the DPS, there, dividends per share, what do you see here? There's an increased dividends per share. Even though the percentage they declared is less, the dividends per share is more, so she is making more money. You guys see that? Okay, so in other words, you're going to quote this. You're going to say, the dividends per share increased from this to this. Let's see how they mark it. So they say here, the DPS is higher than the 120 in 2021. Can you see what a short sentence you said? Ne? So they say there, the explanation gets 1. Ne? What is the explanation? The explanation is the DPS, that's the figures and trends, of 190 is higher than the 120 received in 21. And that is an implication that she's getting more. So that's 3 ticks there. You don't even look at this, ne? This is alternatives. This is alternatives. So if I look at this answer, you get full marks if you wrote that. Okay? Easy 3 marks. Okay, let's go to the next one. Next one, share capital and percentage shareholding. And they say, refer to C and D, then don't go to B and A. Okay? You go to C and D. So they say, calculate Brent's shareholding 28 February 22. Now, I see that's 5 marks, so it means it's going to be quite a calculation. It's not going to be a straightforward. Oh, sorry. And now I recorded myself. Okay, here we go. Okay, existing shareholder. And then I have the hiccups as well. Oh my goodness. I think I must just stop the video here quickly, that you can stop listening.